Whether it's a real estate fund, Forex fund, or a traditional hedge fund, I'm going to share with you some fundraising tips that can help you get to your capital destination. Let's get started. Hey, it's Frank Nagy. Welcome to my channel where we help financial entrepreneurs grow their business in the financial market. If you're new here, subscribe to my channel and hit that like button. An investment fund's success or any opportunity is heavily reliant on fundraising team's capability to raise capital. Fund managers need enough capital to manage their funds successfully and execute their investment strategy. Now, there are several things to consider when developing a plan to attract capital. Where will your investors come from? Now, here are 5 types of investors that I put together. If a newly organized investment fund has no track record but has enough trading experience, then you can contribute seed capital to launch your fund. Since you are seeding your own fund, ask your fund administrator for a reduced monthly fee until they can attract more investors. During this time, the administrator will log your trades, produce monthly accounting statements, as well as calculate your net asset value. So you can waive the performance management fees as well because you don't want to charge yourself. Most investors will be more comfortable in investing in a fund if they know that the managers themselves have skin in the game. Seed investors. Seed investors frequently invest at the early stage of a hedge fund's development, including startup costs. And oftentimes these investors might look for certain benefits, such as a reduced performance fee, management fees associated with making that initial investment. These are called legacy investors. Depending on the capital required, you might even consider sharing some of those performance fees for a certain time. Hiring an experienced hedge fund consultant like Frank Nagy Financial Services will greatly reduce the burden of setting up your hedge fund. A good hedge fund consultant will make the appropriate introductions with proper service providers that will best suit your investment fund's need. High-end net worth investors. These investors come in all shapes and sizes. They are made up of doctors, lawyers, CPAs, and Class C executives like professionals, athletes, and entrepreneurs. These high net worths usually own 4 cars, have 3 homes worldwide, they own a yacht of some sort, even a private jet. Once a newly organized investment fund has seed capital operating in their fund, especially if part of that capital is from the fund manager, you'll have a good chance of securing a comfort level with these guys. Family offices. Forbes magazine defines a single family office as an organizational structure that manages the financial and personal affairs of one wealthy family. Family offices will normally invest in a blend of both startup funds and established firms, and they are more likely to invest in funds with fewer assets under management. The gatekeepers, or the frontliners of these investment groups, are not easy to penetrate. You'll need to spend a considerable amount of time building a rapport with these folks, and it's all about trust and credibility. Institutional investors. Institutional investors include pension funds, foundations, and fund of funds, just to name a few. Institutional investors, especially those that manage money for other individuals, have a fiduciary responsibility and are more likely to scrutinize your hedge fund size and track record. They often look for larger funds that have sizable assets under management and have a strong performance record for several consecutive years. A word of caution: beware of unlicensed introducing agents. The U.S. Securities Exchange Commission, or the SEC, is specific when it states that under the Securities Act of 1934 that no U.S. person can be compensated for referring or introducing capital to a private or public offering unless they are properly licensed, such as a broker-dealer. A person who sells securities that are exempt from registration under Regulation D of Securities Act of 1933 must register as a broker-dealer, otherwise it is illegal to pay them. You as a fund manager have a fiduciary responsibility to safeguard your investors' capital. It is always an extreme privilege for an investor to entrust their capital to honest, intelligent, and competent managers to carefully manage their investments. Hey, if you're thinking about starting a hedge fund or a prop firm, I recommend my ebook bundle, The Ultimate Hedge Fund Guide and The Ultimate Prop Firm Guide. Click on the link below in the description box to know how to download it.